All right, good afternoon, everybody. This is Christian from Tribeca Trade Group with a weekend video on option activity from last week. So every weekend I put together a newsletter and we talk about a couple setups in ETFs and in sectors, and then I kind of drill into the ETF, excuse me, then I drill into the option activity. And last week was just a huge week of option activity. I think a couple days the volume was about 50% more than the average volume. So every day it was your head was on a swivel. You really had to pay attention to the tape as well as, of course, manage your positions. But I thought it would be best rather than to kind of put this into the weekend's newsletter because I would be writing for a long time just on the option activity and the aggressiveness of some of the flow that we saw last week. So I would say there was probably about 30 for the whole week in terms of not the overall option activity, but just where the aggressive and the consistent or repeat activity was probably about 30% higher than last week. And again, that's just something kind of from the top of my head and just kind of the feeling and the lists that you'll see of a couple days. There was just much more activity. And so let me kind of dig into it a little bit, and we'll talk a lot about some of the sectors that really outperformed and that kind of caught up. But really, what it felt like last week, and I'm going to talk a little bit about, I am going to talk a little bit about what I wrote in this weekend's newsletter about fund flows. And I look at several different things. I don't just look at option activity. I think when you do that, you're only looking at, you're basically just looking through a telescope and you're not looking at everything that is going on. So I look at much more than option activity. Option activity gives us some great trade ideas and a great indication of flow, great indication of sentiment, where the aggressive buyers are coming, if they're buying the dip, if they're not, if they're staying at home, where they're positioning in. But there's other things that take place just besides option activity. So let me just start there, and we'll go into. Then we will go into. Let me just talk about a couple of things that I had from last week's newsletter. The industrials, we really kind of caught some nice setups. The industrials, this is what the industrials looked like last week, and this is what they look like this is what they look like now. So really just kind of getting set up and looking at positive setup, looking at setups technically gets you in the right place going into the next trading week. And we did see a big XLI industrial call buyer as well as call buying in a bunch of different names in industrials. But this setup worked really nice here, and I have to just say that the what we concentrated in last week's newsletter really worked out. But so I would say that the general theme of what we saw in fund flows last week is kind of is a catch up to, and I mentioned this on Twitter, but to borrow from one of my Yankee favorites, Yogi Berra, it felt like deja vu all over again. And why do I say that? Because some of the flows that we saw last week in both ETFs, in cash, right, just regular stock flows, and what we saw in option activity was very similar to what we saw back in November after the election. A lot of areas that had not been participating for a little while just saw a huge amount of call activity as well as fund flows. So the first thing that I'll point out is financials. Financials saw $1.6 billion of uh, of inflows last week. You could see by far and away the biggest inflow versus any other sector last week. So, and this had not really, you did not really see this in weeks past. Really, what dominated was tech. I would kind of say, I put in here, how to use these fund flows. There's a couple different ways, but one of which was probably the one that, or the one that I'll bring up in tech. Tech saw just I could, I try to come up with as many objectives here, but I would say colossal inflows into technology over the last month and a half. It was, I think I have it in here. Um, They totaled $3.6 billion in 5 weeks. So they led, tech inflows led for I'm not sure if they led for all 5 weeks, but I think 4 weeks in a row they led. They were the number one sector to see inflows. So $3.6 billion, that's a lot of money to go into one sector. That was far and away more than any other sector. And it's kind of, so when I say contrarian indicator, you have to start to think about, like, is this getting too exuberant? And it's kind of the equivalent of the analogy that I used in this weekend's newsletter is, when everybody gets into a boat and everybody starts to go all the way to the one side of the boat starts to tip and it almost is going to tip over. That's what kind of happened in technology. Everybody got into technology and it got a little bit too exuberant. Everybody started to get in one side of the boat. Then when something else, when there's other areas of the market that become attractive quickly because of, the catalyst could be, which I don't think is a big leap of faith here, but the catalyst is that I think people were caught off guard because the tax plan was actually going to be approved. We saw throughout the year kind of, the Republicans try to pass things and were not able to do it. So I don't think that was really priced into the market. So once it became more of a higher probability that it was going to pass, you started to see other areas of the market get attractive very quickly. And so that boat rocked from one side to the other, and you start to see, money that was pulled out of technology. Now, as a whole, it really didn't lose that much money. But again, $179 million, and you could actually see, the Qs is not included in that because there's multiple sectors in the Qs. But if we go to my spreadsheet, which looks at every ETF that's out there and summarizes all of the flows, you could kind of see that XLK led outflows last week with $543 million, and the Qs also had about a $500 million of outflows. You add these two funds up together, and that's $1 billion of outflows. That's a lot, right? So a lot of money came out of there. Is that a major warning for tech? No, I just think, again, it's go back to that rocking the boat analogy. Everybody got to one side of the boat. It doesn't mean the boat didn't tip over. It just means it's got to come back a little bit. And we saw this again. To phrase what I said, it's very similar to what we saw back in the election time. Just other areas of the market became more desirable. And when that happens, you're going to see a pushback into those things that have really gotten bid up, such as semis and tech stocks, right? So that's my quick feel on that. Someone, because I put this out on Twitter, somebody already said, "Wow, this is a big warning sign for tech. I would expect this to last for a long time." I don't. If you go back to, and I could be wrong, it remains to be seen, right? So if you go into the tech ETF. It's just, we see bouts of this from time to time. It doesn't mean that all the money is coming out of tech. There's nothing really to say other than, we got way exuberant. And every time we've done this, we usually come back and check back to the 50-day moving average. Here, back in June and July, we actually spent some time underneath the 50. We're not even below the 50-day moving average. So I don't think that that's the case. I just think everybody's was underweight. And again, evidenced by those inflows into technology, that group is really was overweight, and there's a lot of underweight groups. All right, so I wanted to focus on that, and the last thing, which I went over in Friday's video, some of those names eventually will become attractive again. They're just, I would say, not yet. Wait until you see some evidence of the institutional buying. But you don't want to go into some of these names when the institutions are not supporting them. So be patient and wait for the institutions to start to buy names like Micron and Nvidia. I have a feeling they're going to. These are really good companies, especially like Nvidia, right? You look at this chart. They're a leader in technology. You just want to be aware when it gets really, really overbought. So it's just coming into the 50-day moving average. This is a great place, but I want to see a little bit of buying. I don't want to be the only one, and I don't want to be just with other, no offense to retail traders, I'm one of them, but I don't want to be in with other retail traders. I want to see the big money start to flow back in there. That's what's going to drive the price back up, not the retail investor. So I think you just want to be patient here and wait to see some buying in the group. So that's what we do every day, and that's what we'll be watching next week. Okay, so that said, what names did we really see, and what were the themes last week in option activity? I put together. I always like think I'm going to come up with like three things on a list, but you could actually see. And this is spelled wrong, which I do all the time, is make spelling mistakes. But there was actually one, two, three, four, five, six, seven. I was like, oh, okay, maybe I can narrow it down to five. But there was just too much activity last week. So I've got seven different areas that we can kind of key in on a little bit. So first one, just like I said with the ETF fund flows, how much did I say that they attracted? 1.7 1.7 billion, yeah, 1.6 billion dollars, and by far and away the most. So KRE, we'll start with the ETFs, both KRE and XLF, just humongous call buying in the beginning of last week. We saw positioning kind of, I would call it smart money when people start buying these things before there's any action on the tape. So names like XLF, KRE, Wells Fargo, Citigroup, those are really some of the names that we saw call buying in a couple weeks ago that I would think those were the really smart, the smart money, the smart traders, because they hit the nail on the head in terms of positioning. I mean, we saw Wells Fargo calls go up almost every day for a span of 2 weeks, and you looked at it and nothing, absolutely nothing was going on in terms of the price action in Wells Fargo. The stock didn't move. We can kind of look at that, but something goes on. When you see it day after day after day after day, this is what I'm talking about. And it didn't even, we got one day where we got over the 50-day moving average, and then there was just a major lull. But they kept buying calls in WFC over and over and over. No joke. If you look at the sweeps and you kind of look back at some of this, they just, again, it was like this. So I don't even want to look at the big transactions. There was this 3,500 that was bought, but it was really just like 1,000 prints over and over and over. And a lot of it was this December 29th. That was the major maturity that we saw, like again, and this was April. But if I continue to kind of search, you'll just see it hit again December 29th, December 29th. So that was really probably the best flow that I think that we saw in financials, that and in the regional banks in the KRE. So what did we see last week? Which again, that I think is really the smart flow. What we saw last week was kind of the catch up and like, oh my God, I got to get involved in this group. We saw calls. We've been seeing calls in ICE now for a couple weeks, but they've come in, I would say, the last couple weeks, not just last week, but a lot of positions. The first time that we saw ICE calls, this is an exchange stock. The first time we saw calls in ICE was here. And this was a little bit of a fake out. It was a little bit frustrating. I had held calls here, and this happened. I took profits, but when it came right back down, it was like, oh man. And it kind of like started to go a couple times. But if you're patient with this and just have a little bit of faith in the order flow, make sure that you have enough time in the option positions that you put on. Again, this took, from when they first started coming in, this was the beginning of October or the middle of October. So that's a long time, especially if you have on like a monthly option play. So I can't stress enough making sure that you've got the right maturity on in your options so that you're not like frantic with looking at this every day and saying, oh my God, why is it not going up? We saw calls, what's going on? Give yourself enough time. Sometimes if they buy January, go out to June. It's not going to hurt you by going out to June if it gives you a little bit more peace of mind. I, for one, again, and I say this all the time in these videos, for one, when I buy front month options, the clock is working against you. there's big theta decay in front month options. So it's constantly swimming upstream with those positions the longer you hold. You cannot hold a front month option position for weeks and expect a high probability that that position is going to work out. So give yourself enough time for these things to work their way through. So that's my one example with that one. Let me just go through a couple other ones, as I'm already about 14 minutes into this video. I always take longer to explain some of these concepts. But Zion, which was featured in Barron's just this weekend, saying it's a good name for tax benefits for this particular tax plan. I'll just show you the activity in Zion this week. I got to go to the 5 days, but you could see a couple times aggressive. Again, what I'm looking for is aggressive activity. I'm not just looking for big blocks. I want to see sweeps. I want to see what that means is they're going usually above the offer to get done, right? So that's much more aggressive. Conviction, the C word, conviction. They had conviction. A lot of all these names that I'm mentioning, for the most part. There's a couple big blocky names in here too, but BAC, KRE, XLF, Zion, Wells Fargo, Berkshire, which was a great trade that we took in the room. I was actually a little bit upset because I was trying to roll the position and I did not get filled. So I missed this last leg up here. It was just one of those things where you put a bid out there to try to get filled, and I was like, oh geez, I never got filled in this thing. But this was a home run of a trade from 185 to 195 very, very quickly. ICE, we mentioned that one. Goldman was a nice move. They bought weeklies. Credit Suisse, this is a position that I've been holding on for a couple months. Look at the Credit Suisse chart. They came in and bought a whole bunch of calls. You have to kind of zoom out a little bit and see where the potential is in this name. Long base after a big decline. Usually this is how it works. Again, it doesn't always work. There's no 100% guarantee, but after a big decline, usually names, they base for a long time before they can recover and make that leg higher. So you've had to be really patient with this one. If you just look at a year chart, it's been all chop. First time it's getting above that 16 level, now up to 17. So Credit Suisse was a really nice trade. Whoops, I always put the wrong thing in here. Credit Suisse was a really nice trade. And I actually added to my position a little bit. There's 6,000 of these. We also saw Deutsche Bank calls as well, so of the European financial names. And I have that one listed here as well. Transports, I would say that's definitely up there in terms of activity that we saw, and just a colossal move. Now, we didn't really see anything in the whole ETF, but we just saw different names. So here's what the whole ETF looks like. I think this was the best performer last week. If you go to sector performers, which I've never seen this type of sector dispersion, I don't think ever in my 18 years on Wall Street. This between some names being up 6% and other sectors being down 6%. Really volatile amongst different sectors. Again, when you look at the overall SPX, it's not going to capture the volatility underneath the hood. And I think if I bring up, I was looking for a good sector dispersion index. I did not find one yet. But if you look at implied correlations, which again is not going to show you the whole picture, you could see that this has continued to drop. So what that means is names inside the S&P 500, they're not moving together at all, which again that's a whole other conversation. But it's a reason really not to be in the indices, I think, right now, and it's a reason to really try. It's a stock pickers market. It's been that way all year long. But again, so I'm sorry, KRE actually edged out the transports. But for the transports to go up 6% in a week, it's just that's really outside move. So what did we see? We caught this in the trading room. FTX was a big winner. That was somebody just bought weeklies. FTX is actually, if you go back to this IYT, the transportation ETF, what's the biggest weight in this ETF in the transports index? FedEx. So by far and away, it's 14% of the index. So we saw a nice call buyer in that. And then I would say the story was really about the rails. huge call buying in UNP and also CSX, which has seen repeat activity. Both of these names, I mean, they all made the move, but UNP was the one that they really went after in terms of call activity. So, keep your eye on that name. I mean, some of these things they moved so quick. I can't say I would definitely be a buyer of UNP here, but we'll see. We'll see if they come back in, if they buy more. I think after the move has taken place, if you caught it, great. And you leave a trailer on. But at this time, I don't think I would be really adding to that right now or starting a position. It just moved too much too quickly. It's just my opinion. LUV, also JetBlue in the airline space, they saw some call buying as well. Some pretty heavy action in this one. And again, similar move like the rails, just a different looking chart in some of these names, which just exploded higher. JetBlue looks pretty decent here. You could actually use that white line, the 200-day moving average. It hasn't gone up that much. It's gone up $1. There may be some more upside still in that one. Dip buying in tech. So as I mentioned in the beginning of the video, tech got hammered pretty hard, but there was some names that saw some nice activity. Autodesk saw call buying after they reported earnings. I think it was too much of a move to the downside, but sometimes that's what you see when names that get run up really heavily into earnings and the earnings numbers weren't as good as they needed to be. So they weren't bad, but again, you have a nice setup here. You've got the 200-day moving average. If it drops below the 200, again, you have to be disciplined. You can't just get in it and it drops below the 200 and you're like, oh, geez, I'm gonna wait till it gets back above. No, you have to be disciplined. And again, this video is for information only. I'm not giving you any recommendations, but a lot of times people will do this, right? They say, okay, great, I've got good support. It's a 200-day moving average in Autodesk. I'll give it a shot. And it falls below the 200-day moving average, and then they don't sell. And then they're like, oh, geez, I'm losing money. So we don't know what's going to happen, but there was an aggressive call buyer right after earnings in this name. Who knows? Maybe it holds that 200-day moving average. But you have to stay disciplined. If it does not work, get out. Don't just sit in a trade and then just, oh, geez, I can't believe this trade's not working. Come on. You have to be disciplined in this market if you're going to be good at this, if you're going to be profitable, right? It's all about big winners and small losers. Everybody has losers. You just have to know when to kind of pull the plug and be disciplined. Salesforce, another name that, again, this is really what I look for names that are in uptrends and again, ran up probably a little bit too much into earnings, but the call buyers started to emerge in Salesforce last week. So if we go, should have this on my list. Let's see if I can find it quickly. You know what? Let's use this. So again, if you're looking for big contracts, this was 700 contracts that went up, 355. Nice size bet, nice size premium, 263,000. Notice they're going out. They're not going out to December or January. They went out to February. So that tells me that it may take a little while for Salesforce to work itself out here. Maybe not in a day or two. You put on a February position, you got to give it a little time, right? It's you may not see that right away. You could actually see, there's a sell signal that's actually forming here. So, support I would say here is 102.32. And then the last name in tech that I'll talk about is Google. This was Friday. This was pretty fresh, but take a look at this transaction that hit. Again, I'm just looking at sweeps, aggressive trades, 492 contracts. Take a look at the dollar amount, 105. So basically at the money calls going up all the way up to January 2019. How much premium is this? $5 million. Just one trade. So sometimes it's just one trade that kind of catches your eye. That is just enormous, an enormous trade. And again, long term. So, if you're looking for like a pop in the next couple of days, sure, Google could do that, but that positioning tells me that they're looking, they're going out over a year. So just keep that in mind. You know, you have to frame that as you should. All right, let's go back to the list of themes. Um, these were not in any particular order, but really what was intriguing to me is energy. And I went over this a couple times now, but I'm going to go over it again. Really, what I like to see, just as we saw in financials, when they start buying XLF, KRE, BAC, WFC, they're hitting everything that they could possibly hit. You have to kind of look, and again, a lot of people don't do this, but you could take a look and you could say what are the biggest weightings of XLF and KRE, and you're going to find some of the single names that they also bought calls in. So OIH, this trade just hit on Friday. I took this trade. It was a block of 10,000 of the January 26 calls that went up for 33 cents above the ask, swept. So what else did we see? Well, the last couple of weeks, if you go to the OIH ETF and bring up the biggest holdings, what are the biggest holdings? SLB and Halliburton. They've been going after Schlumberger now for, I would say, 2.5 weeks with calls. Halliburton was new. HAL, if you look at what they did on Friday, this is pretty aggressive stuff. When they go ahead and they buy calls, January 45 calls, and they finance some of the purchase of the calls by selling puts, they've got pretty good conviction. So again, really a real nice theme when you pick up on, which I did, that they're buying not only the OIH ETF but the top holdings of OIH. We also saw call buying. I think this was Thursday in Oxy. Oxy, one of the best looking energy charts. You know, if you go to the XOP, which is now above the 200-day moving average and almost firing off a MAC. I think it actually did cross over. So that's a bull crossover in MACD. That's a buy signal. You've got targets up here that are on my charts, but I think very, very interesting if XOP gets above, say, $37. So you start to look at individual names, and one of the best one that comes to mind for me is Oxy. This is a name that we've seen a couple times now, an aggressive call buyer. So I now actually have some decent exposure to energy. I'm in Oxy, and I'm in OIH. I think I'm in one other name too, but I can't remember what it is off the top of my head. Next, so there was a bunch of other names too. Again, I can't mention, as I mentioned that last week, there was probably, I would say, of the aggressive activity, probably about 35% more signals than and trades than on average. So I can't talk about every single name, but there's other names that are not on this list. I just can't talk about every single one. I would be talking for 2 hours. So let me go to the next one. Steel. Steel, this was mainly on Friday where we saw a nice new core call buying. There was a big block of 9,000 contracts that went up. Then there was also a few small sweeps. By the end of the day, there was 20,000 contracts that traded in new core. So not the best looking chart. It's right at the 200-day moving average. But I took this position. I don't know. It could also be, you never really know 100% certain, but could be because of the tax plan. Maybe a benefit there. Not only did we see call buying in new core, but we also saw call buying in STLD. Biotech. Again, another area, and it's great to see other areas start to catch a little momentum. This has really kind of shaked out the weak hands in this move. This has been pretty tough and I would say frustrating. A lot of people were talking about, how great biotech looks, and it kept selling off more and more and more. I, for one, thought it would hold the 50-day moving average. Great looking green candle, and then nothing but again, this is where you have to be disciplined, right? I mean, you breaks back below the 50-day moving average. It's up to you to pull the trigger. So many people, they just, that's where I think a lot of people, one of the biggest mistakes that traders make is they do not want to admit that they're wrong by having to push the sell trigger, and they stay in trades for way too long. So granted, this is very frustrating and it kills your morale because you're like, wow, we got a nice green bar here in XBI. and it's going to move back to the highs. You get all excited, but we didn't see that. It failed here and went all the way down from $84, like chutes and ladders, $84 to down to 79. It kind of held in here, and we really didn't see. I know people try to read things and they're like, oh, well, there was puts that went up, but the puts were probably sold. No, they bought puts all in here in the XBI ETF. It is what it is. You could try to think that it didn't happen, but it did. There was a lot of put buying that went on in XBI. But so the silver lining is here. What did we see last week? We saw a lot of call buying. The flow reversed, and we saw some really good, some really call. Look at the 5,000 January calls that went up. This was a $650,000 transaction. This was right in the middle of the week, Tuesday. This was actually started on Monday. That was puts. Yeah. So like I said, it hasn't been, some of these names and areas of the market, they don't just go when they buy calls. I mean, these puts were bought on Monday, no doubt about it. They bought puts. So that was Monday. Tuesday they bought calls. You could see there's more. There was also puts, another block of puts on Monday. So it just is what it is. You can't. Sometimes people, they want to ignore and they only want to look at certain things. You have to kind of take them one for one, and know that it's. You have to realize if there's puts, if they're buying puts, it's going to have an effect just like when they buy calls. So I think ignoring it is acidine, to ignore one side of the equation and to not ignore the put buying. You have to be as objective as possible. But again, that flow turned around, and you can kind of see Tuesday there was more calls that went up. Thursday there was more calls that went up, and again with the calls on Thursday in XBI. A couple names in the space that saw some call buying. Teva was a name. Now back above the 50-day moving average. You can't even see it's so far below the 200-day moving average. So counter trend trade. Gilead, we saw call buying in. A lot of people really like the setup that I posted on Gilead with the 200-day moving average. Look at what it did. Now again, I don't know that this is going to do it. It was a real nice clue that we saw a call buyer in Gilead, but has been edging up ever since then. And again, you kind of draw out here, big break of the 200-day moving average. Unfortunately, a big retracement too, but the line in the sand was the 200-day moving average. So that should be on here as well. I apologize for not having that on here, but that's definitely a name that we saw a real nice aggressive call buyer. And then just a slew of names. And I think this video is already 30 minutes, so I'm not going to go over each one of these, but I would say probably the most interesting was Wendy's, repeat activity, Comcast, which has seen all kinds of big weekly call buyer last week. They took those weekly calls that they bought last week, and they rolled some of them out to January. XLB, just another sector ETF, materials that I think is pretty interesting. We did get a big engulfing bearish candle. So I'm long XLB. I did not add to it on Friday because I did not like this candle that materialized. So that was a name that we took a profit target in, still holding it. And then MGM, the Macau, what kind of got lost in the shuffle on Friday was the Macau numbers were really strong. So we did see a nice sharp call buyer for December in MGM. And then finally, SGMS, they rolled some calls, a really big position. This has been a big winner this year. Whoops, SGMS. It was 10, all the way out to January 2019. They rolled some January 50 calls and they rolled them into the January 70 calls. So they took their profits. Again, big profit, $12.9 million. And they rolled it out to a $6.8 million. So they basically took half the money off the table and they rolled it out. Kind of a smart trade, I think. But they still have conviction in the name. They're just taking some money off the table. All right, so that's the end of the video. A longer than usual video, but really a lot of activity to get through. The activity like made your head spin last week. It was just constant, fast and furious all week, every day last week. It's just how it was, and so it really does. It's really nice to spend some time to kind of reflect, digest what happened last week, and then kind of let the dust settle and figure out what are still the good setups. So that's the end of the video. If you would like to be or try out a trial of the Tribeca Trade Group and the trade room, and basically there's much more. I've been getting some really good feedback about what I've been posting on Twitter, but it's much more in depth and better in the trading room because I go over these setups kind of like I'm doing now in this video, but you could take these trades as they're occurring, especially like some of these trades in the transports, right? I mean, I would not really advocate getting into them now, maybe if we see some more activity. But if you're watching it now, it's really not going to help you too much. So I think you really have to be in the trading room to get the full benefit of that. So you can email me for a trial. My email is C Fromhertz, so my first initial then last name at gmail.com. You can email me, and I'm happy to give you a few day pass in the room so you can see what it's all about. I think you're going to like it. Thanks for watching the video, and have a great weekend.